Hello, this is Coy Wells with Daily Market Insights and U.S. Money Reserve. Today we're going to be talking about the decline in the oil prices that we've seen over the course of the past couple of weeks. This is kind of important to understand. Historically, when school sets out at the end of March, we start seeing prices of oil increase at the pump. And the reason we see that is because we historically know that that brings in additional revenue when everyone's going on vacation for the summertime. What we're seeing right now is we're starting to see the price of oil be reduced. And what I want you to start looking at and what I want you to start thinking about is when you start seeing the price being reduced prior to the summertime or going into midsummer, it historically leads to a recession. Now, why would the prices of oil being decreased in the summertime when we know historically going up be an issue? Here's why. As always, it's about bringing in additional revenue to the country, which is a further sign that the economy of the United States may not be as robust as it historically can be or has been during these times. Right now, the price at the pump on average for the national price is about $2.94, and that's across the entire United States right now. What we're probably going to see over the course of summertime, opposed to prices rising. Now, some individuals and companies are going to raise the prices because that's what they historically do. But the price of oil, crude oil, that we see on the news stations right now, is coming down. So that means the price at the pump should be coming down as well. Historically, that is done when the country is in a position of low revenue. That means that we're trying to put more money into the people's pocket, because if we can put more money into our pocket, we're going to spend more money. And if we spend more money in retail sales and we have more money readily available to us, it spurs on additional spending and boosts up the GDP of the country. Now, if that happens, if you'll look at the historical charts of oil and if you'll study the points and times in history, when the price has been reduced prior to going into the summertime, it typically leads to a recession the following 6 to 12 months. And if you're watching the news that we've talked about over the course of the last year and a half, we've talked about a recession falling in the latter portion of 2018 going through 2019. And that's exactly what a lot of the top economists here in the United States are also forecasting. They're forecasting a recession following the latter portion of 2018 going into mid-2019 or the latter portion of 2019. The problem is most of us can never predict when a recession is actually going to take place. All we're trying to do is provide you with the best information that we have available to us and some of the signs and some of the indicators that are out there. But if you look at the historical trend and charts that the oil market has for us to be able to review, if you'll look at the charts and identify the points and times where we see a decrease in the price of crude oil prior to going into the summertime, when we know that the price of oil typically rises. Okay, think about that. We know that the price of oil rises in the summertime so the government can make more money. When we see it being reduced during that time frame, that means that they're trying to spur on and get additional revenue brought into the country, typically through retail sales. More money in our pocket means we spend more money. So is a recession on the horizon? My answer would probably be yes. If you look at what we've been talking about for the course of the last 6 months to a year and a half, some economists, including Forbes magazine, is predicting possibly a depression. And we talked about how terrible a word depression is. Can it happen? Sure it can. When is it going to happen? We really don't know. But the timeline they've given us is around 2018, mid-2018, going into the latter portion, going into the mid portion of 2019. They're saying that it will probably happen in that time frame. So this is just another indicator like we've talked about in the past. For more information on what we've talked about today, call the phone number to also get your free copy of the 2018 Annual Gold Global Forecast. Call the phone number on the screen and we'll send this out to you immediately, and this will help you understand what we're talking about today and some of the stuff that we've talked about in the past. As always, thank you for watching Daily Market Insights.